Hi everyone, and welcome back to a brand new episode of the monthly economic update here on Economy.lk. We'll do a quick wrap of the key developments for the month of June. If you look at the key indicators on interest rates, we did see a shift in the monetary policy of the Central Bank of Sri Lanka. Previously, we had interest rates going up last year to curtail high inflation as well as on the import side as well. But now that some of the indicators have eased, we've seen inflation on the downtrend from its peak of 70% of the CCPI, and also credit growth being quite muted and in certain months contracting a lot. The central bank has shifted now to an easing cycle, which is a cut in policy rates, which we saw taking place. What does this mean for you? It means that interest rates are coming down, and we've seen this in particular with lending rates coming down significantly, and also deposit rates also coming down. So we're moving from the 25-30% interest rate regime now to an interest regime which will be around 20% or even less as the few months roll on. And it'll be interesting to see whether if inflation continues to fall at a faster pace and credit also slows down, we can see it accelerating as well. We also saw the growth number coming out, of course, a significant contraction in excess of 10%, largely driven by the industrial decline, and that really driven by some of the manufacturing side of it, with exports of apparel and so on declining compared to last year, as well as the slowdown in construction becoming much more seen this in the first quarter of 2023 as well. But we did see agriculture bouncing back as well and recording a noteworthy growth. And as the months go on, and with a lower interest rate regime and somewhat stability on some of the other indicators, growth is expected to pick up as we go along. On the currency side, we did see the currency appreciating quite significantly over the last few months, but in recent weeks we've seen it now settling above the 300 mark, at least for the currency against the US dollar as well. A lot of these factors now depend on market supply and demand, because now the currency is market determined. If you look at the demand side of it, really there isn't too much of pressure because import demand has significantly fallen. Even items like fuel, which was a strain last year, the demand has fallen, plus global oil prices has fallen as well. And from a supply side of it, a key part has been the inflows that we've seen coming into the local government securities market. Prior to the IMF program in early February of this year, we had about 22 billion of foreign holdings of government securities. Now it's close to about 200 billion. So we've seen more than 500 million US dollars coming into the bond market, and that has improved the dollar liquidity situation. In addition, we've seen a much better recovery in remittances, and tourism also doing much better than last year. So all that has improved the supply of dollars in the market. And moving forward, in particular, it'll be interesting to see whether the rupee will stabilize around these levels, or will there be some level of depreciation as imports open up and we see much more activity in the economy. The key thing will be how the restructuring process will happen, and I'm sure those details will become much more clearer in the next few days and months ahead as well. So keep tuned in to the monthly economic update on Economy.lk to get your quick roundup of the monthly developments during a month.